Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Thursday, September 22nd, 2022. Interesting day, I think, mainly because I've counted 1, 2, 1, 2, and got another 1, 2, and I'm waiting for this thing to roll over and to drop more precipitously and with purpose. And even though you get that feeling that you can tell that the sellers are still out there, they're somehow, excuse me, done with this particular level. And so that leaves it open for when buyers start to move back in for whatever their reasons might be, it free flows a little bit more. But I spoke about that yesterday. I spoke about how if we get a strong increase in volatility, which we did yesterday on the sell side, they came in after that tussle, right after the Fed number, or, the hike. And once we started to get more information from Powell about the whole situation, the market did turn negative, and it stayed negative, and it really pushed very hard, very quickly. And that is what I'm looking for follow through on, and we didn't get it. And while I was expecting a bounce, and we did get that bounce, here we are in the hourly chart. Let me just go with there. So we have 1, 2, 1, 2, and now we're come down another 1, 2. So we got the bounce. So now let me just open this up. Here we have it, and see if I can't bring it a little bit more to center. So that's the 1 and the 2. So this takes us up into the number, up into the Fed yesterday. First thing, let's run it up. Then it was kill it, run it, kill it, kill it, kill it, kill it. Now, expecting this bounce, but now we're down minute 1 and 2, sub-minute 1 and 2, could be. But again, the way that this was rejected, 100 points within the hour, and it actually was much quicker than that because it was right into the close, that the market rejected the buying and nosedived. So we basically opened, nosedived, bounced around, had this flurry that just took it all the way up, rejected, and is that going to kick it into gear more so to the downside? Well, here's what we have going on against what all that is telling us. Because again, I'm expecting this thing, if this is the count, 1, 2, 1, 2, 1, 2, well, that would suggest we have a 3, 4, 5, 4, 5, 4, 5, and 4 and a 5. We got all these 4s and 5s to do. So first we got to get the very internal part of this third wave down, which still at this point looks to need another solid down day. So what can we do tomorrow? Well, we could still see the sellers come in and just ruin everybody's higher expectations or their expectation for a higher expiration cycle. Particularly, you got stocks, Apple, you've got Amazon, you got Google, you have Metaverse, you've got Microsoft, you've got Netflix, NVDA, Tesla. They're all jockeying for position in terms of where's it going to go. So that actually has nothing to do with being bullish or bearish or liking a stock or not. It has everything to do with the numbers and what they want to see for tomorrow in terms of where this cutoff will come in and what gets exercised, what doesn't get exercised, what leaves with some value, what has no value. And that will take place. If the sellers take command of the market, then of course the adjustments are going to be that the longs need to adjust to what's happening. Or it can be converse. It can be the other side where the buyers actually do come in and say, no, we have more money. Now, at the moment, I can't really put my thumb on something to say that an institution such as JP Morgan or Morgan Stanley or Merrill Lynch or Bank of America, one of the big banks, or even a large trading firm would have much interest in really continuing to hold along unless you were looking to get out of something. And it could be wrapped around that. Who knows? So tomorrow's is an expiration. They're becoming more important. particularly the Friday. And then, of course, as we get into the third Friday, which puts it into a monthly, and then, of course, then the quarterly. So we're just back to the weekly cycle, but it can be pretty nasty when it involves the larger titans. So again, with the backdrop of what we're hearing about inflation, all the different things that are going on with that, what the Fed is going to do, what the Fed is persistent on saying they will continue to do. So we continue to look for a situation that really has not changed, and they're letting us know that it hasn't changed, but yet there's some in the marketplace that are just like, oh, well, we're bullish on this one. Just so happens to be 5 of the largest stocks. So up goes the index. So we need to continue right now to trade basically what's in front of us. The picture tells me that likely the sellers could take hold and give us another solid down day. And if that was the case, then of course, we're looking for much lower levels. If we have another down 200 where we're sitting, then we're down around here, getting into numbers, into areas that we should find some stronger support. There's a good spot right there. Am I thinking we're going to drop 500 tomorrow? No. Can it happen? Yes. But that's not what I'm going to be expecting. Should it happen, I will definitely be participating. That much I will guarantee you. I will trade it. And that's going to be more important. So again, I look at it as just the sellers have come back. The market's going to move. These are the levels of the support. These are the guide points for the intensity of the decline. And when you can put that picture together for yourself, well, then boom, you're going to be able to play it. And you're going to be able to realize you're getting stronger signals that are telling you, you don't need to buy this. Just hold your short. Or conversely, if the buyers do take over, well, no, it'll go. It won't stop. But every time that it does, folks, this is what's important. Every time that it does, it gets punished. Come in and buy it, but have, for whatever your reason is, but you will draw attention, and then here comes the next round of selling. If they're pegging value down somewhere else and you're bidding 11,700, and they're saying the value is 11,400, you're going to get hit. So the battle is for value. The battle is for where should this market be in terms of that when compared to what actually is happening to money. What is happening on a corporate level? Are happy days here again? Are we really going to get through this pandemic, or are we still paying the price of the pandemic? What's going on with inflation, which is a result of the pandemic, which is a result of having to bail everybody out during the pandemic? All right, so now, we got to pay for it. It's not going to be forever, but again, if you've never understood it, then yeah, you're going to say, yeah, I'm going to buy it because this they're coming out and saying this is bullish. Okay. So the ups and downs we're still going to have, but we're looking for something a little bit stronger tomorrow. Upside, again, from here, they could take it up 200 if they really started to push. Again, it's going to depend on the bigger companies, the bigger components within these indexes. So expiration tomorrow, NASDAQ, here are the support zones. We have right here still, they're just flirting around with 11,537. We've been below it. We've been below it twice or 3 times. It keeps coming back, but that's where we're going to start the Globex session, pretty much right there. Below that, we have 11,394, 11,289, 11,191, and then it breaks. 10,933. Ultimately, there is where minor wave 3 would be equal to minor wave 1 at 10,933. Then we could jump back up and we'd be looking at to see where the intermediate wave 3 would be bottoming. And I'd have to put that back up. We'd have we'll run the FIPS for here. Right now, we're just dealing with tomorrow. And if we drop and we got down to here, that would be a pretty steep drop. So we're covered all the way down to there in terms of just being a minor third. And actually, we could put another layer in there if you really wanted it. Thank you, computer and mouse and everybody else. There we go. So I can run another from here to here, and we're going to see what the minute 3 could be. So you can continue to build where you will find support, Fibonacci support, as this market comes off. And you're not the only one. I'm not the only one. There are a lot of people that are using it. So therefore, they do come into play. Why? Because we got day traders, we got position traders, we got everybody looking at it. And so it'll come into play. All right, so here we have for the minute 3, 11,205. Now that makes more sense for tomorrow. If they get a hold of it, we start finding support. And then here again, here we have 11,331. We're over here with 11,379, I think, 11,431. We got a lot of support coming down. Fibonacci support from different levels. So these are the extensions for the minute 3. These outside, so these are the interior for minute 3. These are the outside for minor 3. Where do we line up? We won't line up there. We definitely line up here. We've got a zone down here. So we have a zone 11,1205 down to that 11,193 area. Then we have another zone from a 10,980 down to 10,933. So they're all there. And we can see them. We'll just see what comes into play. All right. Over in the S&P, it is exactly the same story, except one leg additional. Seriously, one leg additional. We may be in the process, right? We had this from yesterday. So we've already had where we got the intermediate degree 1, 2, minor degree 1, 2. Then we've got a minute degree 1, 2. And then what do we do? Another one that's a 3. This is a 4. We're putting in a 5 of what? This minor 3? Very possible. Remember, we do have some support coming off. We have support at 37.31. And if it gets there, stops, then I'm going to have to start to count some of this out. And it would put the S&P ahead of the NASDAQ. So at some point, I would feel that something's going to happen within one of those companies in the NASDAQ and drive it a little bit quicker, that it won't carry such a high weighting in the S&P. We'll see. But what I want to put up very quickly is the minor. Okay, so that's up. We're going to go there, to there, and to there. I'm hoping that's right. Okay, so what we have, and I'm going to open it. Oh, come on, computer. It's quite annoying when you do that real quick and it just goes black. Come on, there you go. All right, so here we are. Minor 1, minor 2, minute 1, minute 2. I am going to call this minute 3. We'll see. Could not be, but we'll see. And this would be a 4, and now we're coming off in a 5, and now we're going to drop. So, but it's just too bizarre. I may have to recount this, because if it's going to be like the NASDAQ, it's 1, 2, 1, 2. And this would have to be 1, 2, 1, 2, 1, 2. It would just keep going, and it's too many. So I have to really look at this and recount it. But the message is the same. If the sellers come in and they take control, we should definitely start to break below 37.63. And then we're heading for 37.27. So that's moved a little bit. It was 37.31, now it's 37.27. And we have 36.99, 36.72, 36.39, which was the June low. And then we have 36.02, and that's where minor wave 3 would be equal in length to minor wave 1. 3602. So I'm going to say that there's support there. We have it fairly strong. We have some stronger levels. 3721 is going to come up more than once. This one, maybe, maybe not, but it might find a pause. This one, definitely just a pause. I don't know moves too often that'll stop and just go to the next level at 0.78. And then 100%, yes, definitely it could happen there. Ultimately, though, we got to leave it open to 33.99. But again, that's the minor. Now we could put another layer in. Again, you run it down, -1 to -2, and then we'll see where that comes out. And I bet you it's going to come out right in here. And that would be from -3, and then you're coming off. So you can do that to see how this is all going to play out from here to wherever it ends up. All right, so upside, again, as in the NASDAQ, moving averages. I believe that's what's going to guide it. If anything, it did make a slight new low, but I'm not even going to count it. So it's going to be an A, a B, and then we run a C wave up. I don't know. We'll wait. And in which case you're back up in here. You're back up to this resistance. I would not expect to run back to 39. Is it out of the question? No, nothing is. But I would be looking for all of this to kind of contain it for expiration. Again, we could see an expiration where the sellers are once again, they're coming in, they take control, and it goes. And it goes big. All right. That's where I'm going to end it. So tomorrow, expiration. Play accordingly and use the moving averages, use the Fibonacci, learn to put the Fibonacci on for yourself. Most platforms carry it. So they're easy. The extensions, you can set it up similar to mine. If you have a question, please leave it in the comment section. I will answer you. If you have a question on Fibonacci, I will answer you. Or the setup, I will help you there as well. All right. So have a great trading day tomorrow. And our next update will be on the Sunday, the 25th.